all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's December 13th, 2017. And wow, almost over. Couple of weeks to go. What do you think? Where do you put your money at this point? Stock market, has it played out? And what about commodities, precious metals? They're taking a hit right now. Well, before we get started, as always, be part of the show. We love to get your emails. I've answered most of them. I got a few that I have to research to get the proper answer before I reply, but they're on their way. Hey, email us, kl@kerrylutz.com. The Twitter feed's @KerryLutz. So is the stock market finally seen its high, and is it finished going up? Well, many say no, but Charles Nenner is with us now. You'll definitely want to check out his site, charlesnenner.com. That's NENNER.com. Charles, it's been a while. Thanks so much for coming on.
You're welcome.
Hey, so you're the master of cycles. Followed your work for many years, and it seems you seem to be indicating that the stock market at or close to high.
Yes, we started buying in 2009 a long time ago, and we said it should stop going up by the third quarter of 2017, and that's still what cycles show. There are many other reasons why we start to be defensive. Yesterday we went long for the first time the VIX. So the VIX was very low. For people not too familiar, the volatility in the markets has been extremely low, and of course, if markets correct, then the volatility will shoot up. And since the volatility was around 9, there is not too much downside risk. I don't know what the lowest ever has been, maybe 7.5 or so. Anyway, there was a cycle bottom in the VIX, so we were waiting for this for months and months. So now we're defending our position. Now, there are several reasons. On the fundamental side, there is a total overvaluation of the market. If you look at price to book value, price to cash flow, price to earnings, and you see different tops on a chart going back to 1900. So we're about in the same situation as in 1929 or in 2000, 2007. And I want to put something very clear. The situation that the insiders say markets go up 7% a year is based on an average going down from 1900. But the market is, I don't know, I didn't calculate it now, I think maybe 40, 50% above that average. So to say it goes up 7% from here is a ridiculous statement. Actually, it has to go down to go back to the average. So actually, it had to go down to minus 50 in order to get back to the 7%. So I just want to make that clear. So people say, yeah, but markets go up 7% a year. So what do you do if the market is 50% about that median 7% a year? Then it doesn't make any sense. Now, there's another interesting thing, just for chartists, because we also do simple technical work. If you draw a channel from the low of 2009 on the S&P and the NASDAQ, then you see we're trading right at the top of the channel. So that's a channel of 8-9 years. And what I wrote in my research a while ago is that it's hard to find, and maybe I didn't find it yet, that if you have a channel of so many years, once you're at the top of the channel, that you get a breakout on the top. It's probably possible, which will lead to a blow-off, but I would give it maybe 5%, maybe 10%, because such big trend lines of so many years are not broken that easily. So we have some situations, fundamentally, the market is very expensive. Where at the top of the channel, people can just take a chart and draw a line connecting the tops and the bottoms from 2009, and you see the S&P NASDAQ is right at the top. And the cycle was stopping right now. That doesn't mean we come down immediately, but it means the upside from now on is not what you want to play with. And I actually never hear a good argument why people should buy the stocks. The only argument I hear is that, well, maybe the taxes are going to be passed, the plan of the White House, but tell me something new. I mean, if you know that and nobody else knows it, it's interesting. But since everybody knows it, it's already in the price. So I think it's time to be very defensive.
So we've seen precious metals really take a hit for the past 6 years. Is there going to be a time in the near future that they're going to come back?
Well, the major low that we're looking for is in the middle of next year. So I think we're going lower, and there's a huge buying opportunity in the middle of next year. And the other thing that is maybe interesting, because that's also something that you don't hear from most analysts, I think we're getting close to a new bull move in the bond market in next year. So I think that the economy is not going to continue as strong as they think for years already. Say, based on my cycle, we're not going to have any inflation. That will be difficult to swallow for the Fed, what they're going to do. And things look a bit different than everybody thinks.
So it's always the contrarian play in the long run that works, huh?
Yeah, but what bothers me is, and I'm very low, I've been in this business for a long time, also with Goldman Sachs for a long time. I never hear arguments. People say, well, I think the market goes up, and they show it to me. Well, nobody has an argument that can show it. So I always like to come exactly showing why I think what I think. And so now, maybe you did, I didn't hear a good argument why somebody should buy the market over here.
All right. So what do you think the best market is going to be for the coming year with the best returns?
Well, like I said, it's going to have a very nice bull market in gold, but you have to wait till the middle of next year. We have another nice move up in the bond market. And for the moment, I would, if you have nice profits on the stocks, I would stand aside and just wait for another opportunity. And I understand it's very difficult because psychologically people are more afraid to miss the next 3-4% than losing the next 30% on the downside. And it has always been like that.
Yeah, that's called FOMO, fear of missing out, which I like the term because it really combines two concepts, the only two motivators in Wall Street that there are, greed and fear. And here you've got the greed, wanting to get that last 3 or 4%, and the fear that you're going to miss out on getting it, that you're not going to get what you're hoping to get. So FOMO really kind of sums the entire attitude of Wall Street up. But then when things...
Yeah, well, everybody has it. I have it myself with this Bitcoin. I don't know exactly what's going on there. So when I hear this, I read this story about these two brothers.
Oh, yeah.
Who got $60 million from Zuckerberg because actually the judge says that he stole their idea, and then they put $20 million in Bitcoins, and now they're billionaires. So when you read this, you have to sit on your hands not to have the same psychological problem that other investors have.
Yeah, well, we were talking earlier before the call, and there's this dopamine thing. Your pleasure centers, that when your pleasure center is activated, you get a big hit of dopamine. And when you're involved in a mania, a stock market mania, a bubble, you were saying it's the same exact part of your brain that's being activated, and the same effect that's taking place.
Right. It's like taking heroin. It's the same cells that are working out. So it's difficult to stay emotionally neutral. That's one of the reasons I actually never read the financial paper, because if everybody's bullish and I am not, it's very hard to say, well, Mr. Nenner knows better than the other ones, because who am I to say everybody else is wrong? So I don't want to know what everybody else says, because I might not be strong enough to stick with my guns.
Even after all these years, Charles, of following the market and being pretty spot on, especially on your major calls. Minor calls, anybody could be wrong. Things can happen. But the major calls, you've been spot on. Even at this point, you really don't want to be influenced by external opinions. You need to just focus in on yours.
Well, I tell you honestly, I still don't believe what we're doing. It's so crazy. It's so crazy that on cycles and price levels, you can predict what's happening, and there's no free choice in all these situations. Like, for instance, maybe, years ago, I came up with this war cycle. It says, starting slowly in the middle of the new century, the first decade, we're going to have wars that become big wars. And I'm watching it as it develops. And I'm still amazed how that is possible, that right on every so many years, a big war develops. So I probably never going to figure this out. Once I said when I work less, I'm going to write a philosophy about why it works what I'm doing, but I still have no ideas. I have nothing to write. So that's why I'm still not sure, and I will never be sure, because actually how it really functions, I don't know.
Yeah, well, once you think you know it all, that's when the gods intercede and make you. That's when you really have problems, right?
Well, yeah, but I see people going through life that think they know it all, and they have a nice life. I would like to be like that, but I'm not. What can I do?
Mm-hmm. Yeah, well, I kind of feel the same way. The moment you think you know it all, then that's when everything comes crashing down. Hey, one question: right. U.S. dollar cycles there. What are we seeing?
Well, we're seeing that the dollar should go to new low into next year. And then you get a whole new bull market in the dollar.
Oh, really?
So the euro is trading at 117.5. The target is 122.50 by January, February next year, mm-hmm. and then it could go back to par.
Go back to par. And now I've seen a lot of people tracking the U.S. dollar, Japanese yen, and they say you can pretty much predict what's going to happen with gold by tracking that. You have any opinions on it?
Well, I don't like to make interpretations between markets, so I do everything separate. So I don't connect the movement in the yen to what happens to gold. I look at the gold cycle separate and the yen cycle separate.
Okay. So as far as the dollar reserve currency, do you have any forecasts about that? Does it keep on going where it is, or does it get replaced?
No, that's going to continue. The dollar is going to continue to be the reserve currency. I mean, we talked about years ago, they talked about China. It didn't work out. It's very difficult to take away the trust of the world in the dollar and change it into something else. Maybe you remember when the euro was 160. Oh, yeah. Very famous people wanted to be paid in euro, not in dollars anymore, and they regret it in the end because, it's always the dollar is the easiest thing.
Mm-hmm. So it's just a question of the infrastructure that surrounds the dollar, the debt markets, all of that.
Well, Europe, let's say the dollar index, I think, consists of 56, 57% against the euro. Mm-hmm. Europe is in a very dangerous position. I mean, the union can still fall apart. The problem with the immigrants is going to be huge. Mm-hmm. The people are getting much older than in the United States on the average. The same is with Japan. The markets that will continue to well. It's like in the East, it's like Singapore, China, India, and Australia. That's where all the action will continue to be for many years to come. So if it's the euro against the dollar, I really, I work with the cycle. But fundamentally speaking, I don't trust the other countries. I think the dollar is still where you want to be, especially if we get into war situations, and then the United States is still in the best position.
And the war cycle, it looks like we're moving closer and closer to a major conflagration in the Middle East, at least as before, between the Sunnis and the Shiites.
Yeah, but that has been going on for, what is it, 1,000 of years. And usually where it looks that it's dangerous, that's why it's not dangerous. Mm-hmm. I still think that there's going to be a big problem with the situation of the Chinese bringing out all these islands and Japan and the sea over there, maybe Korea. The Middle East is going to have the usual problematic situations, but I don't think it's where it's going to be affecting the rest of the world.
Mm-hmm. Well, it's definitely interesting times ahead, and you got to wonder, sometimes things seem so crazy, and yet they follow these cycles.
Right.
Right. So
yeah, the cycle actually are cycles that tell you the interpretation of facts. So I usually give an example. Let's say you own IBM for a couple of years, and IBM is up 80%, and now IBM comes up with a great result. So is it going up or down? Well, if the cycle is up, then IBM goes up, and the Wall Street Journal writes, well, people poured in buying IBM because they have great results. But if the results are the same, great, and the cycle is down, it comes down, and the Wall Street Journal says, well, people took profit because they don't think IBM can do better next year. So it's all a matter of interpretation, and that's why cycle works, because I also don't know exactly the facts, but I know how people are going to look at the facts.
Mm-hmm. Yeah, so it's more about human behavior and just that it repeats more than anything else as far as external factors. I guess like Mark Twain said, history doesn't repeat, it rhymes. and it's rhyming pretty good here. So for the coming year, stay away from the stock market, wait to get into precious metals towards mid-year. I guess that includes silver too. And I guess go for the VIX, right?
Yeah, and the bond market maybe January, February already, but people they want to know exactly, if you write in, you get the research for free for a while because we want you to see what we're doing. Then you're more up to date, a very dangerous time. So if you go to charlesnenner.com and you write in, I like to have the research for free for a while, then you're on top of all these cycles and you know what to look for.
All right. And we have a link in the show notes to this interview to your website. So you can just click it, sign up right away, and David will start sending it to you almost immediately. Yeah. And hey, Dr. Nenner, it's great to have you back on the show. Good catching up with you, and we'll keep an eye on the markets and touch base with you sometime during 2018, and best of luck to you.
Yeah, once you get the action going, give me a call, and then we'll evaluate how bad it is.
All right, excellent. Hey, and email us again. Be part of the show, kl@kerrylutz.com. You got any questions for Charles? Just shoot them off to me. And while you're at it, the Twitter feed's @KerryLutz. The Facebook page is Financial Survival Network. Charles, we'll talk to you again real soon. Thanks so much.
You're welcome. Bye-bye.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.